Welcome everyone, my name is David Piatek and today we're going to be talking about understanding VA home loan benefits. Now you've completed the first portion of the MRP certification by learning about the military and some of the challenges that they face, along with some aspects of the VA home loan. So what we're going to cover today is updates to the VA home loan and some of the challenges that come up when military members move across the country and want to use their VA home loan benefits, or if they're out of the military and they want to use their VA home loan benefits. It's important to note that what we cover today is from the VA handbook, because there's a lot of information that's online that's outdated and there's a lot of misinformation that's out there. So welcome everybody. Today we're going to be covering again understanding the VA home loan benefits. My name is David Piatek. I'm a senior vice president at the Federal Savings Bank, where I help military members across the country leverage the VA home loan. I'm also an instructor for the National Association of Realtors for the MRP certification and a contributor for the program, and also an instructor for the ABR. I'm also a condo instructor for the Chicago Association of Realtors, and I'm also a pre-licensed CE instructor, along with currently serving in the military. I actually just got off a deployment in December, so I know firsthand the challenges and the information that goes out there isn't always accurate. When you transition out of the military, you have to go through a transition program. Even though I'm in the National Guard, I still had to go through that just like active duty folks do. And let me tell you, the amount of information you receive, number one, is overwhelming. That's why a lot of military members, as they transition out of the military, don't necessarily know all their benefits. So when military members think about using the VA home loan, it can be very confusing. It gets confusing for realtors, it's confusing for lenders, it's confusing for veterans themselves, right? So that's what we're going to be covering today, and really just going over and understanding all the different aspects of the VA home loan and the challenges military members face when using the VA home loan. So some of the things that we're going to be going over, we're going to understand what the VA home loan is, some of the common myths around the VA home loan. Veterans have questions all the time. Even in today's information-filled internet, there's still a lot of stuff that people don't know. We'll talk about why veterans should use the VA home loan, because a lot of times, still even today, people get steered away from using the VA home loan. We're going to go over the differences between being eligible for the VA home loan versus being qualified for the VA home loan. We're going to go over the different properties types that they can purchase. We're going to cover multi-units and some of the big changes that have happened with that. We're going to talk about VA condo approvals. We're going to talk about appraisals and what repairs look like. We're going to go over closing costs, and then what questions you should be asking a lender when you receive a client that has a pre-approval. And if you guys have any questions, my contact information is down below and also at the end of the video. So feel free to reach out with any questions. So what is the VA home loan? So it was created after World War II for military members to be able to buy homes. The VA home loan guarantees the loan, right? So it's a government product. It guarantees 25% of the loan. That's why military members have favorable interest rates, and it's like they receive the 25% down payment, right? It's very secure for lenders to do. It's designed for active duty, National Guard, and Reserve members, veterans, and surviving spouses. Who offers VA home loans? Well, the VA doesn't offer VA loans. It's banks, credit unions, or brokers. Because a lot of times military members will get different either emails or they'll get mailers thinking that, hey, it's the VA that's approving me for the loan. Different lenders have different requirements, but eligibility is standard. When it comes to credit requirements, banks and lenders have all different requirements, right? Some have no minimum credit score, some have a 580, 600, 620, 640, and a whole gamut of different requirements. Now, others also look at debt to income versus residual income requirements. Debt to income is a pretty straightforward formula. It's just basically what your total income is. They subtract out your liabilities and your proposed mortgage payment, and that's your debt to income. Residual income is very different. What residual income looks at is they look at your net income, very different to gross, And then they subtract out your liabilities, your proposed mortgage payment, and then there's a finite amount that you need to have to be able to live on, which the VA determines. And that's all based on different regions. Also, some lenders are Ginnie Mae direct lenders where there's really no overlays minus credit. Because again, if you're going to be lending, think about it yourself. If you're going to be lending someone money, you at least want to know they can pay their bills on time. So that's kind of the big difference. Some of the common VA home loan myths is you can only use the VA home loan once. That's not true. It's a life benefit. You can use it multiple times. Military members often say, I can't buy another home because I already have a VA home loan. That is not the case as long as they have enough entitlement. It's 100% possible to buy 2 properties with no money down. How long do I have to live in a property before I rent it? There is technically no limit. So a lot of people will tell you that, oh, it's a year requirement. Look, people's situations change, especially like me being in the National Guard or active duty folks that, hey, I got orders, I need to move, I need to rent my property. You could 100% do that. Can I buy a home without living in it? Yes, you can. So it's very dependent, right? So it's either for military members that are deployed overseas or geo-bachelors, meaning that, hey, I live in Chicago, but I'm stationed down at Fort Bragg, right? What happens then is as long as you have a spouse or a child that occupies that property, you're actually able to buy that home without living in that property yourself. And there's really no time limit for that. I can't rent my property because I have a VA home loan on it. That is not the case. Yes, the VA home loan is designed to be a primary residence, right? So when you purchase the property, you have to occupy, or ideally you occupy that property within 60 days, minus the scenario we just talked about. So you can have a VA home loan on a property and turn it into an investment property. I want to free up my VA benefits and keep my home. Is that possible? Yes, it is. You're able to, like any loan product, you can refinance out of a VA home loan or into a VA home loan. So we do a lot of that for people in today's market just because they've gained a lot of equity. So they're able to refinance out of those VA loans, free up those benefits, and keep their current property and turn it into an investment vehicle. The home needs to be in perfect condition. This is for a lot of purchase transactions. The home just needs to be in livable. It doesn't have to be it could be outdated. That's not a problem, right? So we're going to cover some of the different property requirements that the VA has a little bit later on through the video. Can you buy an income property? Yes, you can, as long as you live in that property. So this is primarily towards multi-unit buildings where you have, 2, 3, or 4 unit properties where you can actually rent out some of the units and generate income. And can you use the VA home loan to build a home? Yes, you can. There's plenty of places out there that offer 100% construction loans. And is there an acreage restriction? There is not. So if you want to buy a property that has 100 acres on it, military members can purchase those types of properties. Why should military members use the VA home loan? Because typically you're going to have lower interest rates, which is huge savings over the life of loan, especially in this market. But you have to be really careful because military members see these shiny interest rates. And the problem is that a lot of times there's a lot of fees associated with those interest rates, which we're going to be covering when we go over closing costs. Another big benefit is there's no down payment, which is huge savings up front. Military members can purchase sooner than any demographic that's out there just because of the no down payment requirement, which also allows for larger first-time purchases, which I attached the link at the end of this video and also down below from the NAR research that they did about this. There's no private mortgage insurance, which also is a monthly fee that is paid by regular loans if they don't put 20% down. But remember, the VA is guaranteeing 25% of the loan. So it's kind of like a 25% down payment when you use the VA home loan. That's why there's no private mortgage insurance. If someone's dual military, that means, let's say I'm a military member, which I am, and I have a spouse that's also a military member, we don't I can use my benefits to buy one property, and let's say we move, I could have my spouse use their benefits to buy another property. We wouldn't be combining our benefits together. If a service member has a service-connected disability rating, they have the potential of getting property tax breaks. So in certain states, if you have, let's say, 100% disability rating, then you don't pay property taxes. So it's important to research that. And here's a link that you guys could look up that all the different state benefits that are offered. I would check with the county. I would check with the city, county, and the state to see what benefits exist. If a service member has a VA service-connected disability rating or the Purple Heart and they're on active duty, the VA funding fee is waived. The VA funding fee is a fee that is charged by the VA to use your benefits, which we're going to break down here shortly. And it's normally fast processing and underwriting times. Now, I get a lot of mixed emotions or mixed conversations when I talk with both buyers and sellers agents because they think it's very slow. Well, that's why it's something that you need to ask your lender, whoever the lender is that the client is pre-approved with, to walk you through that timeline, which I'm going to break down here in a little bit. Now we're going to talk about eligibility versus qualification. How much can a veteran borrow? The VA doesn't set a max dollar amount for the VA home loan. And right now there is no limit on VA home loans as long as a veteran has their full entitlement. This also includes that if I have a VA home loan right now on the property and I'm going to be selling it or refinancing out of it, I'm still able to make an offer on the property and get pre-approved and make an offer on the property as if I had my full entitlement. So there wouldn't be a limit as long as you buy and sell in the same day, right? So that's kind of like you can't purchase a property and then sell it if you have VA home loan benefits on it. Now, if you have a VA home loan and you want to keep that VA home loan, then it goes back to the old rules, right? Now there's caps on how much you could borrow without putting a down payment on the property. To find out what your cap is in the area you live in, you can go to Fannie Mae's website to look at the loan limits. Now, it's always based on the single family loan limit, no matter if you're buying a single family, a condo, or if you're buying a multi-unit. Now, who's eligible for the VA home loan? Right, and then we talk about the eligibility piece, is that you really need to get a certificate of eligibility to determine if a military member is eligible or not. Now, it's important to get these documents because you'd be surprised on the amount of military members that don't realize that they don't qualify. And it can just be due to a variety of different reasons. It's also important to know for National Guard members that they did change the rules earlier in 2021 about who is eligible from the National Guard part. So make sure you double check that, just because I've come across multiple times where military members were turned down for a VA home loan just because the lender didn't know the requirements. Here's some of the eligibility as far as like being on active duty. So as long as you're 90 days in continuous service, you're already eligible for the VA home loan. Is it always smart as soon as you get into the military to buy something? That's kind of debatable just because of the amount of moving around that they do. But a lot of people use these properties as investment vehicles. And if somebody's out of the service, they require 24 months of service. They have their veteran status. They're still able to use the VA home loan. For National Guard members, it's a minimum of 6 years in the National Guard, providing that they have all their points. Now, the caveat to that is that you could be 1 year in the National Guard, right? No prior active duty, and still qualify for the VA home loan if you have 90 days of continuous service on Title 10 orders. So typically, a deployment. Now, this could be overseas or stateside, because a lot of people will do deployments within the United States, like Border Patrol. There's a lot of different scenarios where that comes up. So just make sure you talk with the military member and ask them, do they have the 90 days of continuous service on Title 10? Now, training is not included in that, even though you're on active duty. So that time does not count, and it's also spelled out on the DD-214. There's a lot of exceptions to the minimum service requirements as outlined here. There could be you might get out of the service because of a hardship. The government is downsizing. Which is a reduction in force, or if you get medically discharged, you're still able to use the VA home loan. Now, if somebody has an other than honorable discharge, you still want to request a certificate of eligibility. The VA even tells you, based even on all the rules that they have, is to still request one so you can see if those benefits come back as having them or not. If you don't have them, again, you can check the VA handbook, or if you don't have an honorable discharge and you're not getting a certificate of eligibility, then you just need to contact the VA to see what they could do to help. Now, this is again why it's important to get that certificate of eligibility sooner than later. Now, what is the VA funding fee? We touched on it a little bit earlier. It's an origination fee that VA charges for the military member to be able to use the VA home loan benefit itself. So here's some of the numbers when you talk about what the VA funding fee is. If a military member is using their VA loan for the first time and they don't put any money down, then it's 2.3%, and then it goes down with down payment. So the idea is that military members have the option of putting money down. They don't have to. But if you look at subsequent use, meaning they've sold their property, they're buying another property, that VA funding fee drastically goes up from 2.3% to 3.6% because the VA encourages you to use some of the money that you have from the sale of your property to put down on the new property. It's the only fee that can be rolled into the mortgage on a purchase transaction. The rest of the closing costs need to be paid for by the military member. This is what it looks like from a regular certificate of eligibility. You'll notice that you'll have the veteran's name here, the last four of the social, the entitlement code, which is when they served in the military, and then you also have the branch of service they were in, and here they show if they're exempt or non-exempt, right? So non-exempt meaning that they don't have a service-connected disability. You'll see that the military's the veteran's basic entitlement's $36,000. Now that $36,000 is not what the military member can buy, because I'll get those phone calls too, like, hey, I could only buy $36,000 property. What can I buy? You can't even buy a trailer for that anymore. So that's just letting you know that if that $36,000 is there, that means the veteran doesn't have a limit on what they can buy per se, right? They still have to be qualified for it, but this just gives you the eligibility for that. And then if you look at this example, you'll see that the military member is exempt. It'll still have the $36,000, and then it'll say the VA funding fee the veteran is exempt and how much they receive in monthly compensation, right? So in this situation, this military member is 100% disabled. If military members have had prior loans or they have a current loan, you're going to see that in the prior loans charged to entitlement. So you will be able to see that if they sold their property and their benefits got freed up, then you won't see any prior loans. But when the lender requests the certificate of eligibility, you want to be able to at least take a look at this or have the military member be able to glance at it. So once a military member is eligible, what makes them qualified to secure a VA home loan? So we're going to go over some of the financial requirements that military members have and the exceptions that exist around that. So if you have a W-2 wage earner, you typically are looking for a 2-year employment history. Now, there's a lot of exceptions to that, especially with COVID that happened over the last 2 years. So if there's breaks in service, typically they don't want you to go more than 6 months. But again, there's a lot of circumstances that allow for military members to be able to use their benefits. As long as it's full-time work, there's a lot of options. Now, when it comes to self-employment, the VA requires a minimum of 1 year, but there's definitely some restrictions to that. You really want to be in a 2-year mark so you can actually average out the income, because what will happen at least from my experience, is that if you have someone with 1 year of self-employment, that has to be divided out over 2 years, which disqualifies a lot of people from using the VA home loan. Now, one thing to note is that a lot of times people that are self-employed, they write a lot of things off. So when we look at income, we look at after all the deductions have been accounted for. So if someone makes 100 grand a year, but then after all their deductions, they make 40, well, we use the $40,000 amount. So a lot of military members don't realize that. So just kind of keep that in mind. There's a lot of other income that can be used. Disability income can be used, retirement, pension. If you receive child support and alimony, that could be used. But it also vice versa. If you pay child support and alimony, that actually is deducted from your income. If you have Social Security income, you can use that. And any part-time and overtime work does require 2 years of receiving that income in order to be able to use it for the purposes of buying a property. Now, one thing to note, when military members go to school full-time, they receive a benefit from the VA, and they get a stipend for housing. It's called BAH, Basic Allowance for Housing. That income cannot be used to qualify for the VA home loan because it is an education benefit. Now, when we talk about transitions, school and military to civilian workforce, that is a little bit easier. So the whole 2-year employment isn't required for these types of transitions, right? If they're in the military, obviously they're already employed, but if they're in school, they might not be working. So as long as you're transitioning to a full-time employment from school, you're able to use all the income from that from your new job in order to qualify for a mortgage, which again kind of is a big bonus and why military members are able to buy sooner than anybody else. One, no down payment, and then the other is that they can use their benefits as they're getting out of school. A lot of military members don't realize that if they're going to school or they're unemployed and their spouse is gainfully employed, then you can still use the VA home loan. Now, a military member is still going to have to be on the loan application, so their credit's going to be looked at along with the spouse. But if the spouse is working full-time and the veteran is not, you can still use the VA home loan to purchase a property and use the spouse's income, especially if you collect if the military members collecting any type of other types of income like we talked about, then you definitely can use the VA home loan. When it comes to assets, military members typically need to have at least money for closing costs. Now, they can receive closing costs from a variety of sources, right? It could be from a spouse if the military member is doing the home application by themselves. It could be from family. They can withdraw money from a 401k. So a lot of military members have what's called TSP accounts, which is a thrift savings plan, and they're able to withdraw from it for the purposes of buying a home. Now, sometimes they need reserves, but that's more for multi-units we're going to cover here in a little bit. Now, reserves have to be the military members' own funds. They cannot be gift funds. But if you have, let's say, a TSP or 401k, you're actually able to use that as a reserve account. And no, you don't have to withdraw money to have it liquid in order for it to be reserve account, because we can use stocks. There's a variety of different things that we can use. Now, when it comes to the credit score, again, there is no minimum according to the VA, but a majority of lenders have a minimum credit score. Now, when it comes to bankruptcy and foreclosure, Chapter 7 is typically going to be 2 years out, Chapter 13, 1 year out, and a foreclosure is 2 years. Now we're going to be talking about all the different property types that military members can buy using the VA home loan. So we're going to talk about they can buy single family homes, including new construction. Some of the most common repair items that pop up is peeling paint. So like around windows, doors, that's some of the common things that come up. And then also punch list items for new construction need to be completed prior to the loan closing. If you guys want to check what the minimum property requirements are, it's in the VA handbook. And I put that under the resource section. Military members can buy farmland. Now, the farmland itself is not going to count towards value, and it can't be something that they can use as income for the purposes of buying a property. Now, when we talk about condos, which actually we're going to break down in detail here in a couple slides, requires VA condo approval. So this is the link to the VA condo approval portion. Just please make sure that you use this link because it directly goes to the VA, because there's a lot of websites that show, hey, these buildings are VA approved. There's only one source you should be looking at, which is on the VA site. Typically, for condos to get VA approval, it's about 5 to 30 days to get that completed. When it comes to 2 to 4 unit buildings, there is no limit on what they can purchase. We have military members all the time looking at, between $600 to $2.5 million multi-units that they're actually able to buy. There's additional inspections and addendums. Typically, you need a termite inspection unless it's a second floor condo or above. And then certain states don't have that. Military member doesn't pay for this fee, but in some states they are allowed. So again, this is something you just need to double check with the VA handbook to determine what is allowed and what is not. If the property's on the well, septic, they need to get water inspection and septic inspection. The military member pays for that. They also, everybody in the transaction has to sign the VA mandatory clause. This is basically a clause that if the appraisal doesn't appraise at value, then military member can get out of the contract and get their earnest money back. Or do you guys negotiate the different terms? The appraiser is not a home inspection, right? The appraiser is someone that goes out to the property to determine, one, the VA's minimum property requirements, and also determine the value of a property. And home inspections are highly recommended, but they are not required. So if you guys go to the VA local requirements, it'll break down what each state's requirements are. Now, when you talk about multi-unit purchases, it's 2 to 4 unit properties where it's one pin with multiple dwelling units. So just think of it like an apartment complex that has a max of 4 units. Now, the big change is that you can use rental income to offset a mortgage payment. Now, prior to the new changes, you needed to have 2 years of prior rental experience on your tax returns in order for you to be able to demonstrate that. But let's say if you're in real estate and you're a military member, that wouldn't count as experience. It has to be 2 years of renting properties on your tax returns. The big change that happened is now you can hire a property management company prior to taking ownership of a multi-unit property in order to offset the mortgage payment with that income. But it does factor into your qualification for your residual income. Typically, you're going to need 6 months of reserves, so principal, interest, tax, and insurance. Again, no gifts. It could be a 401k, yet no, you don't have to liquidate it. What they use is market rent, and they use 75% of that. So if it's $1,000 a month per unit, then you're able to use $750 of that as income for a military member to offset the mortgage payment. If the military member is keeping an existing property, you can offset the full mortgage payment with rental income. So this is a little bit separate from the multi-unit purchases. So if I have a conventional loan or an FHA loan or a VA loan currently on my primary residence, and I'm not going to be selling that property, but I'm going to buy a new property, then I can eliminate my current debt on my property with a lease agreement. So say, hey, I'm going to rent my property out to whoever, and it covers my mortgage payment, then I can actually qualify for the next property without the current property affecting me. So when we talk about getting condos VA approved, this is a kind of an untapped market, just because I do these across the country. So there's also a lot of confusion between what condos and townhomes are, right? So you have condominiums and you also have planned unit developments, so PUDs. So think of PUD like a subdivision where you have a lot of single family homes, and then you just pay like a small association due to just maintain the grounds and road. So townhomes are often assumed to be planned unit developments, but a lot of townhomes, that's just a construction style. So a lot of townhomes are actually condominiums, but it just depends on where you are. For example, in Chicago, a lot of townhomes are condos, and let's say in Virginia, a lot of townhomes are actually planned unit developments, or they're true single family attached properties. So that's something you definitely want to investigate, because on a planned unit development, on a PUD, there is no VA requirements for that. But if it ends up being a condo, there is. A lot of questions I get, well, hey, it's already FHA approved, so it's going to get VA approved. That is not the case. Two very, very different requirements. To determine if a project is a condo or a planned unit development, you need to look at the legal description of the subject property, along with looking at the decks and bylaws. But the most definitive thing you can look at is the articles of incorporation. You can get that normally off the state website, or if you go into the treasurer's office. What can disqualify a condo from getting VA approval? There's really two things. Right of first option or right of first refusal. That's where the association could buy the unit from the condo owner. And then also if there's any leasing restrictions, minus if they have no short-term rentals and a minimum of 1 year lease, that's okay. But the rest of it would disqualify a condo. An example of that would be, let's say the property management company needs to review the applicant before renting the property. That would disqualify the condo from getting VA approval. And what if the entire building is rentals and has low reserves? So unlike like FHA and FHA and conventional loans, where they have all these different requirements for condominiums, the VA doesn't have any of that. And I get this all the time, right? From buyers agents, sellers agents, all the time. They'll say that, hey, there's there's over 50% rentals in the building. This can't get VA approved. Well, the VA doesn't care about that. They don't look at, hey, they don't meet the 10% reserve contribution. They have single entity ownership issues, where one person, one person in a 10-unit building owns 4 of the units. Well, if you look at conventional and FHA, you wouldn't even be able to do that loan in there. But with the VA home loan, you can. So a lot of misinformation around that. Now, that's not lender specific. That's from the VA. How much does it cost to get a condo VA approved? If you're going to use a third party, it's about $800 to $1,600. I just looked it up the other day. Now, lenders can complete this for free, right? There's no cost to doing it. The only thing that you normally pay for is to get all the condo docs, which typically the buyer pays for. And one of the nice things about VA condo approvals, and this is also a test, if you ask someone like, hey, is this building VA approved? If they say it used to be VA approved, that means they don't know. Because once a condo is VA approved, it's VA approved for life, right? There's no more additional documents that's needed to supply to the lender outside of an insurance policy for a military member to be able to close on the property. Now, that brings about its own separate issues, just because you want to know the financial health of a condo, right? So just like the VA doesn't really have many requirements for that, you want to be able to get all the information and review that with the military member. Now, one of the big changes is that all condos can be VA approved with a waiver. Should I say VA approved? They could still get denied, right? And that's okay. There's an exception that happens from the VA. So if you look at a condo and it says VA, you look up in the portal, it says it's been denied, no problem. Your military member still wants to buy in that property, they can submit a waiver to the VA and they'll get an exception to buy in that property. This also counts because a lot of military members that looked at condos most likely switched to conventional loans just because they were told that it'd be impossible. And again, it's really easy. And depending on where you are, the turn times to get a VA condo approved is super quick. So yeah, we really don't have any issues with that. So just keep that in mind. So, but again, if a military member wants to buy a property that is not VA approved, they can 100% do that. And typically within the contract time, as long as it's 30 days or so, they're able to do it. And then if a military member used a conventional loan to buy a property because the building wasn't VA approved, they can refinance back into a VA loan now and not pay private mortgage insurance if they have that and get their condo approved. Does a condo have to be VA approved before making an offer? In my experience, majority of my condo business, the VA buildings are not VA approved when we're making an offer, and we typically get it done within it's normally like a 2-week turnaround to get from start to finish to get a condo VA approved. So just make sure you find someone that specializes in that and that can do it, just because a lot of lenders don't do it. Just because you have to chase down HOAs, especially if they're self-managed, it's a little bit more difficult, but someone with experience walks the association through to make that happen. In order to find out, again, so here's the link again for getting the condo report. I would not necessarily, so when you search for VA approved condos, it's important to note that you actually have to search by the association name, not the property management company. I wouldn't, in the search field, I wouldn't put in the condo name. I would just put in the state that it's in and then just search through all the condos and then just until you find your association. Sometimes the associations get misspelled and it won't catch it, so just look for it. Now, when it comes to VA appraisals and repairs, there's a lot of misconceptions about the VA appraisal process, right? So one, they require extensive repairs. A lot of times, appraisals come back just fine without any type of repairs. Values come in low. That is very tiny portion of appraisals that come in at a lower value, right? And that's something that we're going to actually talk about in the next section when we talk about Tidewater. The process takes forever. It does not, right? So typically, you're going to see anywhere from 10 business days to 14 business days. There's going to be a link in the resources that breaks down each region's appraisal turn time. So that's something that you want to check, and you want to check it often just to see if those appraisal turn times have gotten shorter or if they've gotten longer. So that's something that you want to be able to look out for. That appraisals stick with the property for 6 months. So let's say you got an appraisal done, value came in low, and then you have another veteran that makes an offer on your property. It actually stays with the military member and not with the property. So if you think about like FHA loans, that's why a lot of times it's confusing because people cross different products. FHA loans, the appraisal stays with the property itself. Property has to be in perfect condition. We talked about that. It does not need to be in perfect condition. It could be outdated as long as it's functional and meets the VA's minimum property requirements, then you're good to go. That the VA has a separate appraisal form. It doesn't. It does it on the Fannie Mae form 1004. So it's still done on the same report. It's just the requirements that they have are just going to be a little bit different. Now, one of the unique things about the VA appraisal is that if the appraiser feels that the appraisal is going to come in low, they notify the parties involved to provide additional comps so they can provide them to use for the appraisal. Now, it's the only loan program that allows for that, right? So if you get an FHA loan or conventional loan, the value, if it comes in low, you'll find out when the appraisal comes in, not with VA home loans. They typically allow 2 business days to submit comps so the appraiser can review it. And then one of the things that you can do, which we're going to go over next, is that with Tidewater, you're just required to provide comps. That's it, right? So you can just say, hey, here's the comps that are similar to this property that have sold within the last 6 months to a year. Well, you can actually submit a GRIB form, which is optional for Tidewater, but it's not but it is required if you want to, let's say the appraisal comes back and it comes in low, even though you provided all this documentation, then you would have to submit a grid form style document in order for them to reconsider that value. Now, it looks like an appraisal adjustment, right? Where it has the subject, the comps that you want to use, it has all the adjustments to it. Now, this is something that you probably want to get with someone that's experienced in doing these types of things, or typically if you do CMAs, you'd be familiar with it. But I would look at the current appraisal that is provided to the military member so you can then make these adjustments or get some help on doing them. Now, when it comes to the condition and repairs of a property, right? So the VA specifically says that appraisers shouldn't recommend repairs that are cosmetic in nature, right? So again, if there's some wear and tear, that's something that is okay in a property. Now, if there are repairs that are noted by the appraiser, you have a couple different options, right? You can request a waiver from the VA itself, right? The request is signed by the veteran. Lender concurs with the veteran, like, yes, this is something that we can do. Now, remember, not all lenders are created equal. Some lenders won't allow for this to happen, so make sure you ask that question. And the property must be habitable in order for these things to get waived. Now, the other option that you have is that you have the waiver, right? So, hey, let's eliminate this condition altogether. And the VA says, yes, this is something that you can do. Now, if the VA says this is something that has to get repaired, the military member can set up an escrow account in order to do those repairs after they've taken ownership of a property, right? Especially in today's market. And if in an escrow account, they'll put in a certain dollar amount of the repairs plus like an additional percentage that is calculated, right? And that changes. They get that money back after the repairs have been completed. Now, some of the common repair items that do pop up when it comes to this is if there's roof issues, foundations, floor, plumbing, electrical, and HVAC systems that need to get replaced, so there's some damage to them, you can do that with an escrow account. You can also omit certain structures for repair purposes. Now, this is something that people definitely don't realize because I've come across this way too many times. So you can actually omit barns, sheds, garages, different structures on the property that might be dilapidated. Veteran needs to sign off on that and what their intent is to do with the property. So if they say, hey, I'm going to tear this down or whatever the case may be, that's something they just need to submit. Now, omitting a structure can lower appraised value after the fact, meaning, let's say you get an appraisal in and they note like, hey, there's a barn on the property or there's a garage on the property, and that adds value to a property, and they say, hey, I'm going to omit that, then the value can come in lower. But let's say if it's like a shed or something like that, then that's something that you wouldn't have to do. Now, here's an example, right? In the top left, you'll see this shed. So this is a real life example of an appraisal that came back on the property that had some repairs that needed to get completed, right? So they had a shed, the repair scraped paint around the windows, and then replacing the smoke detector. And then we talk about these around the doors, peeling paint. So in this scenario, we were able to omit the shed so they didn't have to do the repairs. And then we moved the remainder of the conditions to a post-closing scenario where the seller was like, I'm not going to do these repairs, even though they cost a couple $100 or they could have done it themselves. They didn't want to do it. So instead of delaying the transaction, we moved all these to a post-closing scenario where the veteran set up an escrow account with their own money, and then it was able to get their money back after they finished the repairs. The appraiser goes back out there, looks at it, and says, yep, you're good to go, and the money's released. Now, when we talk about closing costs, this gets pretty interesting. So average closing costs are about 2 to 3% of a purchase price. Sometimes they're a little bit higher. But on VA transactions, they're typically 4 to 5%. Now, why is that, right? So VA loans, depending on who you work with, can actually just be a lot more expensive. So one of the reasons is because lenders charge origination fees, which typically are going to be 1%. So if someone's buying a $500,000 property, they're going to get charged $5,000 by the lender. And also you see those shiny interest rates, which typically are going to be an additional 1 to 2% additional fee that a military member pays. Now remember, these fees can't be rolled into the mortgage. The military member has to come out of those, come up with those costs out of pocket. That's why some lenders just don't charge these fees. So make sure the military member does some shopping and they get the best deal possible. Now, when it comes to closing cost credits and concessions, all closing costs could be paid for. There is no limit, right? So other loan products, they have a 2, 3, 4, 5% max, even 6% max. VA loans don't have that. You're actually able to cover all the costs associated with the loan, plus the seller can give 4% to the military member to pay down personal debt with that. Like we've had scenarios where people have been able to pay off cars and credit cards or any type of debt that they have. But just know that that's not normal. We don't come across that too much, but it definitely happens. Earnest money, even though the military member doesn't have any type of down payment, they still typically need to put earnest money down. So that's something you have to talk to your clients about, just because sometimes military members will say, well, why do I have to put earnest money down if I have no down payment requirement? Now that earnest money is applied towards closing costs and or down payment. It doesn't make a difference which one, it will always be applied. Now the max money that a military member can get back at closing is the earnest money they put in. So let's say they got a closing credit to cover all closing costs, but they also had to put a $10,000 earnest deposit down. Well, in this scenario, all the closing costs would be paid for and they would get their entire earnest money back. And also, if you're in a state where taxes are paid in arrears, let's say example, Illinois, and all closing costs were covered, you put $10,000 earnest deposit down, plus you had like another $6,000 seller tax credit, then you're actually able to get $16,000 back at closing. So sometimes military members are blown away that they get money to buy a property. So it's pretty cool. No, veterans can't pay realtor commission or fees. I come across this all the time where they'll be charged like an admin fee of $500, or they get charged a real estate commission just because, let's say the realtor charged the military member because the sellers didn't provide a co-op for the commission. Military members cannot pay for that. And that's something, again, you want to check in the VA handbook, because people will say, well, we normally do this and we've never had an issue, until you're sued. So keep that in mind. Now, what questions should I be asking a lender? These are important because a lot of times, the reason I talk about this is because I get a lot of phone calls from clients that end up being disqualified from the VA home loan, and that could have been easily avoided if the lender reviewed everything. And I'm sure if you've been in the business long enough, you've come across that. So understanding a client's pre-approval and how much a client is pre-approved for. Clients are never pre-approved for a dollar amount per se, right? Like, let's say if they have a pre-approval for $200,000 or $300,000 or $500,000, that's just a rough estimate, because their pre-approval is based on a mortgage payment amount, right? There's a max that they can qualify for. So taxes vary. Insurance varies by area. If you have flood insurance, that can widely vary what a military member can qualify for. And have all the financial documents been reviewed for the purposes of the pre-approval? Another thing is that, especially if they're active duty and they're moving across the country, right? Let's say if you're in New York currently, right, and you're stationed in New York, and you move to, let's say, Fort Polk, Louisiana, you're going to have a drastic difference in basic allowance for housing, right? One place in New York could be $4,000 a month, and then you're moving to your next duty station and it's only $1,000 a month. Sometimes what happens is people qualify them at their current BH, not what their future BH is going to be. And that's just a lack of experience on the lender side, but that's just something you want to be able to ask and note for yourself. And also, have the federal tax returns been reviewed? A lot of military members that I come across have some type of side job that they have, and they'll have losses on it. Even though they're small losses, they still count against the military member. And what's unique about VA home loans is child care expenses count against the military member's income. So no other loan does that. So let's say you pay $1,000 a month in child care expenses for daycare or whatever the case may be, then that money is actually deducted from their income, and that can disqualify someone. And then receiving the certificate of eligibility is important because, again, it outlines the benefits of a military member. And majority of certificate of eligibilities come back automatically from the VA. But then there's those percentage that doesn't come back from the VA. Now, you need that in order to order an appraisal. So just think about the timeline. You go under contract, the lender never requested the certificate of eligibility, and then it takes 2 weeks to get. And sometimes the VA requires a DD-214. And if a military member misplaced that DD-214, which it happens all the time, then it can take a couple weeks, up to 6 months to get that back. So keep that in mind. And then the communication and availability, being proactive versus reactive. I'm sure if you've been in the business long enough, you've come across all different types of folks that you work with. But you want to make sure, one of the key things that wins a lot of deals is being proactive upon offer. I would CC your lender on the transaction, have the lender reach out to the listing agent right away, let them know clients are qualified, everything's been reviewed. Just give them that confidence and start the transaction off on the right foot. You also want to make sure that you get updates. All parties get updated all the time. No one likes surprises in transactions, especially when it comes to delays in closing, because it affects everybody, right? You hire movers. I just went through this, right? You hire movers. The sellers need to hire movers. They're closing on their place. So it's a chain effect. So make sure that you're getting updates all the time. And then just make sure that you can text, call, and email them. So at least you can stay updated, or if something comes up, you can talk through that. What's the average closing turn time? Make sure the lender walks you through that when they order the appraisal. For example, like when we do a transaction, we order the appraisal within 24 hours of receiving a contract. That means that the application has to go out to the borrower and also has to be signed and sent back. And if there's any type of appraisal fee, it needs to be collected. But you want to order that as soon as possible, because again, you want to check the turn times in the of the VA for the appraisal. So then you can actually have a quick closing and not do a 45 or 60 day closing, which that's why I hear sometimes people say like, well, it takes forever to close a VA home loan. Again, depends on who you work with for that. And when can a closing disclosure be issued? Why is that important, right? And you're not a lender, you're a realtor. Why is that important to know that? Is because without that being issued, you cannot close. 1. 2, you need 3 business days prior to a closing. This document has to be disclosed. So a couple things go into that, right? Can a CD, closing disclosure, be issued prior to a clear to close? And can a CD be issued prior to an appraisal? This all helps in the timeline, because once an appraisal is back, it takes 24 hours to review, and boom, you can close. So know those different things when it comes to working with a lender, no matter if it's a local lender or a national lender. Now, these are the resources that we talked about. They're all going to be in the description, so you guys can search all these things if you want to, right? This is probably this probably accumulates to I would say about 900 pages or more. And if you guys have any questions, you can always reach out to me. Now, one of the things that you want to know is that military members get free real estate licenses from a lot of local real estate associations. So if you're looking to expand your team, contact your local association and see what they can offer. Here's my contact information. So if you guys have any questions, feel free to reach out to me. Shoot me a text, shoot me an email. Just let me know where you got your contact information from, and I'm happy to walk you through any type of troubles that you might be having. Good luck with the MRP certification. I wish you guys the best of luck. Talk to you soon.